Hey guys, it's Crossroads here. Today I want to talk about PayPal, specifically earnings, which are coming up on Tuesday morning. Now, I will not be covering these live. I did last time. Sadly, they and SoFi are intent on reporting at the exact same day and time. And so I'm always caught between the two. This is one, and I'll go through the numbers here in just a minute, that I think will be similar in a lot of respects with quarter two, with two significant changes, but I don't know that it will be enough to capture the market's attention. I'm kind of expecting the stock might move up or down, a little bit, but it's not going to be a massive movement. I think quarter four is when that big movement comes, and I could very much well be wrong. If I'm wrong, it's probably to the upside rather than the downside. But let's take a quick look at my numbers, and then we'll talk about some of the things that I'm looking for as well. So this is just a draft of what I'll be rolling out as far as earnings predictions here shortly, but the numbers are good and verifiable. So I'm expecting them to have actually a 6.4% revenue increase year over year. And as a part of that, you can see branded growth is at 5% year over year. And we also have transaction margin dollars at about 6% year over year, $3.85 billion. If you look at quarter two, the report where they increased guidance, you can see that this is actually a little bit north, but not too much north of what they were projecting for transaction margin dollars and also for revenue as well. So there's a couple of other numbers that we'll look at here, and then we'll get into the breakdown. EPS of $1.3, which is above analyst estimates. The revenue is, by the way, above as well. We can see transaction margin. I see that it is increasing from where it was in the previous quarter, but still trading within a range. Free cash flow is a big one. We'll talk about that in a moment, but 2.2 billion is what I'm projecting. This is just a guess. We know what they're going to report or have a large range in quarter three and quarter four, but I expect more of that'll be in quarter four. And then active users, I think, will actually tick up and accelerate to 2.5% growth year over year, as well as an increase in guidance. So overall, what are the factors? Why am I expecting that we're going to receive 6.4% year over year revenue? There's a lot of positive factors, but there's also some negative ones. And let's start with the negative first. So as you may be aware, or you may not be aware, Steam, of course, there was disruptions with PayPal. PayPal is used very frequently for Steam, and it was an issue that wasn't actually PayPal's fault. It was one of their partners that had issues with Steam, and it caused issues for maybe about a week or so, which it's not the biggest volume for PayPal, but a number of these things add up over time. Of course, there was the de minimis impact from tariffs in the United States. We ended up, because of tariff wars, in essence saying that this minimum amount that was acceptable without a tariff fee was no more a thing. Initially, that hit in August for China, US, and then the rest of the world at the beginning of September as well. Jamie Miller, the CFO, and also Alex Chris did guide for this, and they basically said, hey, the reality is it does impact us by a little bit north of 1%, especially in the branded side of things. And so it's just something to be aware of, that there was a headwind just because of the tariff woes. Interest rates on customer balances, there was some lapping benefits as it relates to their credit portfolio acceleration as well, and a little bit of downtime over in Germany as they ran into some banking issues specifically. But that is certainly not the only thing going on for PayPal. There's a lot of positives too. And so let's look at some of those positive revenue drivers. This is one of those, and one of the reasons why, by the way, I think quarter four will be a much more robust quarter, not just for revenue, but also for a number of factors. They didn't give us exact numbers for Braintree and what they're expecting here. They had more comments, though, in the earnings transcript and also at the fireside. But in essence, we see Braintree headwinds, which again was intentional. That back here, they were like in growth at all cost mode, even if it didn't translate to the bottom line. And Alex Chris and team said, hey, that doesn't make sense. Let's take higher take rate. Let's not do a race to the bottom. In return, we'll lose some volume, not as much as they expected, but that was certainly a drag here in the fourth quarter last year all the way through. And so they have a harder comp here in regards to that, although we do see some reacceleration from Braintree, not as much as we'd like to see just because of the issues that I mentioned. And quarter four, I think, is really where we begin to see that acceleration. So that is certainly a factor that is a positive, that the headwinds are being removed. Some other factors as well. This is one, it's the DXY index. What this tracks is how the United States dollar trades against international currencies, a whole basket of them. Now, Some it impacts, of course, much more than others. But if we actually zoom out here and we look at it over, let's say, 5 years, we can see that this has been elevated for much of the time, especially back in 2022, but also in 2025 in January when they first reported, it was about a 10% headwind. PayPal does hedge against this as far as with currency headwinds. You can see the DXY is down by about 5%, and it's been roughly neutral really since we would began the tariff wars in April. And so since PayPal gets about 40 something percent, I think it's 42, 43% of the revenue from international sources, it's a big global company. This has an impact on them, even though they do hedge. So when the DXY comes down and is more stable, like right around 100, which is that neutral rate, what this means is the revenue that PayPal receives is actually much closer to the dollar neutral that they also report and show in case there's issues like this. Now, again, they do hedge against this, so the full benefit of the DXY falling is not realized by PayPal, but there is a large chunk, and the larger or the longer that we actually see the dollar trade within a stable range, usually the less hedging, unless they're seeing something in the near future that companies tend to do, including PayPal. So that is certainly a benefit as well. Omnichannel continues to go well in Germany. There was a report that came out earlier in the month that indicated that 5 million people in Germany, 6% of the population there, I believe, had already gotten a debit card from PayPal. Now, why is that a big deal? Mostly PayPal is online. It dominates e-commerce and other transactions in Germany, but they don't do much in the terms of omnichannel push. This was a big push and rollout since May. And so those are frankly incredible numbers. And the early read is that that's going to continue to increase transaction volume and also overall revenue too. So that's a great factor as well. There's a number of other initiatives that they're rolling out, which I won't break into too much. Some of them are just a little bit too early to make a massive difference in revenue, but a lot of these are accretive. The vaulted experiences, PayPal complete payments, rolling out globally, a little bit of ad revenue that you mix in there as well. Omnichannel here in the United States, Venmo monetization, a lot of stuff. And this is, I think overall, we're going to see a little bit more acceleration on the revenue side rather than what they guided for, which was, looking at maybe 5% overall growth as well. Now, branded transactions are at 5% year over year. And this, I think, is one of the reasons why PayPal may not move a lot in terms of a stock, because we've seen similar numbers in Q2. They actually posted a triple beat, and it was a really strong beat, not only over their own guidance, but also over analyst expectations. And yet the stock tanked. It did. It was actually pretty surprising given the expectations and given how low that PayPal was already trading. And the only thing that I could really isolate there at the time, now this is, of course, my projections, free cash flow is very light. We're going to look at that in just a moment. And branded growth was, lacking. 5% is not great. Branded, of course, has a higher take rate as well. There are a number of factors that indicate that branded growth is likely to accelerate in Q4. One of those is, of course, PayPal had projected for several points of slowdown of global e-commerce because of tariff wars. We've not seen that. We've actually seen the opposite. So that's really good, and that will continue to likely be good. Through holiday season, consumers seem resilient as well, but they're really accelerating buy now, pay later in this Q4, which is the holiday quarter. I think that they'll get a bit of transaction volume and increase in market share. And so we'll see branded accelerating a good bit in this Q4. Will it get to double digits? I'm not sure. I'm really curious on how they guide. They'll probably guide conservatively, as they always do. Again, we're not already there into the holiday spending week and Black Friday, but that'll really give them a look at how things are going in the e-commerce side. But the other factor as well that I think might shift things. Now, this is, if I'm wrong, maybe last quarter that the market was really focused on free cash flow. By the way, here are the estimates, and you can see most analysts are expecting flat year over year, not year over year, but quarter over quarter sequential growth in terms of revenue, partly because of these headwinds. And I just think that they're wrong. I think that they're being overly conservative. Is that remarkably different than my numbers? No. EPS is actually really low, at 1.2 instead of 1.3, which would be fairly surprising. So they're going to beat these estimates, but it may not be enough. So I want to look at free cash flow here. That's the one factor that I think will be very interesting. So PayPal, in their own guidance, let's actually pull up this guidance here. We can see that they reiterated free cash flow of between $6 to $7 billion. That stayed the same. A lot of other things stayed the same or actually increased or improved in this case right here. Now we can see what the free cash flow, let's close this out, was in the prior quarter. Now, part of this was timing benefits of PayPal working capital, which means that we'll see some of what should have been free cash flow in quarter two. Otherwise, in quarter three, this can be very lumpy, as you can see, quarter over quarter. Sometimes there's really good reasons for this. Like, again, this should not have been as high and this should not have been as low, except for timing benefits from selling buy now, pay later products to KKR. Some of that, by the way, will hit in quarter three as well. PayPal announced a contract with Blue Owl Capital to basically sell some of their buy now, pay later, pay in four loans to Blue Owl, which basically means that they're accelerating buy now, pay later. We already know that, though. So anyway, if you add these two together, you're a little bit over $1.5 billion. And going back to their guidance, they're again saying $6 to $7 billion. So if we take the midway point on there, we're looking at around $5 billion of free cash flow over the next two quarters. So I'm expecting, just based on volumes, that we might have $2.2 billion this quarter, and then we see maybe something like $2.8 billion in the quarter four if things go really well. Perhaps it won't be quite that high, but regardless, we will see between that $6 and $7 billion. And this right here, $2.2 billion, again, let's look here. It would be the second highest ever that they've reported in terms of free cash flow in a single quarter. This one right here deserves an asterisk, again, because of the timing benefits here. And so anyway, the market might get really excited, even though free cash flow usually wouldn't be that strong. It's better to look at it over a year-over-year basis. And so all year over year, it is growing. Things are looking good, and we will likely see a little bit of growth here year over year. I think they'll actually get closer to that $7 billion amount on the year for free cash flow. But you can see Alex Chris, when he came in, it was during the low point, and we're seeing meaningful acceleration in free cash flow. This is not a dead company by any measure. Now, on EPS, I did talk about what my EPS is, 1.3. It's a little bit north of where PayPal guided for. It's also north of where analysts are expecting. A large part of that, and there's a couple other smaller parts, is buybacks. PayPal stock has been abysmal in terms of price action. But the nice thing is, a silver lining is, although I do wish it was going up, believe me, is that they're spending $1.5 billion each quarter on buybacks, which of course, the lower the share price is, the more shares that they do end up buying back. And as a result, that improves and boosts EPS over time. Now, there's a couple of other margin factors that I think that they'll actually post just a little bit higher of the gross margins as well, which factors into this. Branded experiences also help too. So I think that we'll see that up. Now, the other kind of wild card factor is not so much guidance. I think that they probably will increase guidance slightly for the end of the year, but is active users as well. So if we look at active users, actually, let's pull that up here into their earnings deck. And this is right here. You can see active users. For a while, they were actually losing accounts. And at the time, back in 2023, they guided for this. They said what was going on. In essence, under Dan Schulman, they were like, hey, let's pay people to use our product. And then maybe at some point in the future, we won't have to do that. Sometimes, honestly, that's not the worst strategy. And there can be times to absolutely do that and scale and then monetize. Didn't work out for them. And so as a result, they pivoted away from basically paying people to use their product to a beneficial strategy that, they lost some accounts there, but they gained accounts that actually contribute to that bottom line. Now, you don't see a huge amount of acceleration. Most of that is it's a law of large numbers. When you're talking about 438 million people, that's a lot of people. But because of some channel partnerships that they're doing, and as Fastlane continues to get pushed out, because of what they're doing as far as the omni-channel push, and we'll see with the Venmo card push there on campuses, and also what they're doing with Venmo going global in January, and some other factors too, I think that we'll see this number continue to increase. I'm guessing that we're around 2.5%. And so I think, especially as PayPal World rolls out, that we're going to actually see active accounts continue to increase. Fastlane is a part of this process as well. And they've just made products a lot more attractive, easier to use, and beneficial, such as the buy now, pay later 5% cashback that they're doing just this quarter only. So I expect to see that increase. We may see the transactions per account just go back basically to neutral year over year. Again, partly because of those headwinds that they had on Braintree. We'll see that starting to accelerate in Q4. But if that used to be a bear case, it's flipping to a bull case, especially as they've built out a large flywheel and as they're able to do things like have advertisements that cater to this audience. Of course, they have more data on more people and more merchants as well, and those ads become even more attractive too. But this is one of those quarters where it's near the end of the transition time into acceleration in Q4 and all the way through next year. And so my guess, again, for this quarter is it will be a very good, solid quarter, a triple beat that will not excite the market just because that top line revenue and branded are not there yet. And there's not a meaningful read yet on guidance, especially for these new products next year. We may have some early reads, and I hope that we do. Definitely need to have those in Q4 earnings in January as we look at the next year. But for now, I think this might be one of those quarters where the market takes a look at PayPal and says, yeah, it's fine. Let's see you next quarter. And that's where I am with PayPal. So regardless, let me know what you think in the comments. Is there something that I'm overlooking that's a major factor in earnings this quarter? And do you think that Q4 is that quarter where we'll see that beginning of that real acceleration ramp through a variety of factors that we talked about today? Anyways, thank you for watching, commenting, and subscribing. And until next time, happy investing.